premium right now in Shanghai on silver, or an $85 premium in gold.
Is a vacuum that is
Yes.
sucking physical from west to east. Why? Well, because if you're a Western seller, why would you sell it in the West? To your point is, go sell it in Hong Kong, right? Get paid whatever that was, 12% more or whatever, for the exact same thing you could sell to a Western buyer. You're just buying it, selling it for 12% more in China, and then they're hoovering it in there. And so if you care in the long run about, well, if we think gold is an essential asset, where is it going? Well, if it's all going into the East, that's not in our long-term interests.
No, it's not. And the West looks at gold as a trade, and the East looks at gold as a settlement asset. And now you're seeing it happen in the Middle East too, which looks at gold as sovereignty after seeing what's happening around the globe. And you can see it with the selling of treasuries. Saudi Arabia has imported roughly 1 million ounces of gold from Switzerland alone this year. And these numbers are fugazi. Pardon my French. Goldman Sachs just came out and said, the numbers that we told you at the end of 2025 about what we expected, institutions which are built on trust are being exposed as being not trustworthy. And I think that's why you're beginning to see this hoovering. Now, you and I have been talking about this arbitrage in China for a long time. And anyone who's been around finance long enough would know that when you see arbitrage, the big boys and girls in New York would say, bang, throw everything at it. And it would be over in a matter of days, right? Because they would capitalize on that arbitrage until it normalizes. It hasn't normalized in over a year. Why? Because they know that deep down these traders are motivated by greed, and they will siphon every single ounce that is privately held and send it over there, and it will never come back. And I think it's really
they're using the greed of capitalism against it here. Sort of
exactly
a
right. Yeah.
Or a judo move, sorry.
Yeah.
All right, so it sounds like you've said that the volume of imports going into China, which has risen to what a key issue is we don't know when of that, right? Could happen next month, could happen 15 years from now, right? We don't know. A lot of those are sort of, forces that are going to be increasingly making themselves felt as time goes on here. Where I'm going with all this is, when I hear you talking, I'm torn. I'm like, okay, well then why should I buy precious metals if they're being suppressed? And everybody right now, all the power players or the government wants them suppressed because our military industrial complex wants to buy silver on the cheap. China wants to buy gold on the cheap for its Enbridge and world domination goals. Like, why would I fight against powers that are much bigger than me that are pushing the price of it down? And I would think your answer is, but I want to let you say it yourself, is, hey, yeah, we don't know, but at some point that game's going to be up. And that's why you say, I just think we should all...
The music stops.
Okay. So to this point, we'll talk a bit more about it at the end here, but to this point about just, the smart thing to do then as an individual is just keep slowly grinding, your exposure higher over time through dollar cost averaging. Obviously, folks can do that through your firm, Miles Franklin, and you have, we talk about all the time, but you've got phenomenal staff there that can help people do that and set up these automatic payment programs and things like that. I'm one of those clients, full transparency. But you have also been very generous in recent months, offering a special offer to this Thoughtful Money audience, be able to buy junk silver for below spot, at basically at conditions that you've said you've never seen before in your career here. So you're taking advantage of this and you're letting our audience come along for the ride, which is fantastic. We've been telling people, given you the pricing that you've been offering, which
jack rates up, margin rates 300% into the rebalancing, which creates a collapse. The whole thing got messed up. And if you're a refiner and you have metal that you bought from the public, you're hedging it on the downside. You're selling short to offset what you have in that you're working on refining.
Yeah.
And the price kept going up so fast, their short position was getting margin called. And then they're raising margins, more margin. And if you don't post that margin, you get stopped out in 24 hours. And so it literally destroyed so much of what normal is in our market and in the refining industry. We're still digging our way out of that. And the I guess the offshoot of that is anomalies like what we're seeing in junk silver and what's happened to the refining industry, and it's played havoc on people's psyche. And it really did a disservice to this industry because people think, well, you're always going to get below spot when you sell stuff.
Mm-hmm.
I've never seen that in my career, ever.
What you just heard from Andy Schectman should stop every investor in their tracks. As the president of Miles Franklin, a veteran precious metals dealer, Schectman has a unique vantage point on the global flow of physical gold and silver, and what he's seeing is unprecedented. He highlighted a staggering 75-cent premium on silver in Shanghai, a clear signal that demand in the East is outstripping supply and creating a vacuum that is literally sucking physical metal out of Western vaults. This isn't just about market dynamics. It's about the very trust underpinning our financial institutions, which he warns could collapse in a matter of days if this suppression continues. Schectman, who has significant skin in the game as a client of managed accounts for precious metals, believes this artificial gold and silver price suppression cannot last. The question isn't if the music stops, but when. And what happens next will redefine wealth for generations.
Continue to naked suppress the price of gold and silver because the rest of the world will stand for delivery. So you'll see great volatility. I would be shocked if you saw a 3 handle on gold, and it would last a matter of seconds.
Okay.
As the arbitrage would just gobble it all up. So I don't know. I think you're seeing higher highs and higher lows. So if you had silver go down and somewhat try and test that low that we saw in January, I don't think it violates it. And the same thing is true with gold. Physical demand is far greater than the ability to keep it down now. And that's, again, this is not retail driven. And it's that type of volatility and that type of thought process that keeps a lot of people on the sidelines. And that's exactly why those that paint the tape, those that move the price, tugging on our emotional heartstrings, they understand it. They're good at it. And yet the price continues to march higher. I would argue, Adam, it's been this way for my entire career. For 35 years, the rates are going up instead of down, meaning treasuries are being sold. That tells you all you need to know, that they're not as safe as they once were, or the perceived safety is not as valid as it once was. So this link of rates having to go down in order for gold to go up is, again, it's manufactured. These are algorithms that are controlling this narrative so that people don't see it for what it is, that the dollar and the treasury are not globally as demanded as they once were, but we have to maintain that illusion. So you sell gold, you buy the dollar, you buy oil, and all of a sudden everyone believes because price is the easiest way to misdirect the public, they don't look under the hood and try and think critically. And that's exactly what happens. But yeah, you're right. I do think it reversed, and I think it's short term, and I think it's synthetic at that right now.
Okay. All righty. A lot of questions here and comments about the miners right now. Now, I know in your business, Andy, you deal with the physical ounces.
CME Group raised margins into the rebalancing of the ETFs, all the stuff happening, blurring everyone. I mean, at some point, people just get overloaded. And I think, of course, then into tax season, April is typically a very bad month all the way around. It has reversed tremendously into May, not only in viewership, but also in business. I look back last year, April was our worst month of the year last year also, if there's any correlation. So yeah, I have. And it's also typically, long before even the internet, we would call it the summer doldrums in this industry.
The doldrums?
Summer doldrums, where,
I thought you were calling it gold drums.
No, the doldrums where, people are outside stepping away from their computer, kids are graduating, camping and whatnot. And usually as you get closer to Labor Day, you see things start to take off again. But yeah, to your point, I have 1% own any gold and gold related equities of the entire financial matrix. And yet the people, that 1/2 of 1%, I would argue, are the smart, well-informed people on top of the biggest money in the world who is setting the pace. And don't worry about it. If it does go to those levels, it'll be brief. I would more or less all but You can't guarantee anything, but in my own mind, I'm saying not a chance that it violates those levels for any substantive period of time, even if it comes close to violating them. And part of me feels like it won't. This is just the volatility that keeps everyone
It's just that
scared
job.
and paralyzed like a deer in headlights.
Yeah. All right. Andy, look, thank you so much for being so generous with all this. Folks, please thank Andy by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it. Andy, we're here at the hour, so I got to let you go to get to your next interview and your gauntlet of interviews today, but can't thank you.
Andy just laid it out. That 7.5 cent premium on silver in Shanghai, the one he called off the charts, isn't just a number. It's a flashing red light, a direct consequence of the gold and silver price suppression we've been discussing, and it's draining physical metal from Western vaults at an astonishing rate. Central banks and savvy investors in the East are acting on this arbitrage, buying up what they know is undervalued, while Western markets remain largely oblivious. What happens when the buyer of last resort stops showing up, or when the physical supply simply runs dry? We're seeing the biggest bubble in human history inflated by recklessly printed money, and this market manipulation is just another symptom of an unsustainable system. The paper price of gold and silver is being held down, creating an exit ramp from dollar-denominated metals pricing for those who are paying attention. This isn't just about a few cents here or there, it's about the very foundation of global finance. When the post-mortem on this failing structure is written, the true cost of this suppression will become clear. So the real question is, do you want to be the person who understood this early, or the one who explains it to their accountant later?